welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, June 29th, 2022, and I'm pre-recording this Trading Places Live for Thursday, June 30th. Currently, we have futures down just a little bit. Dow futures down 46, S&P 500 futures down about 7.5, Nasdaq futures down about 27. Of course, it is Wednesday evening. A lot can happen overnight. We'll see how things progress overnight and where we open tomorrow morning. We do have crude oil currently up about maybe 0.5%. 10-year Treasury yield flat. It was down on Wednesday, but it is flat overnight. Actually, it's maybe up 1 basis point or so. But we'll see where that goes in the morning as well. Before we get started today, let me go ahead and walk you through today's agenda. So we'll start off with the daily market recap, then jump into talking technically, sector rotation, EB.com mailbag, earnings spotlight, and we'll wrap up with the 3 you must see. Let me take you over to Earnings Beats. For those of you that are new to Earnings Beats, you can simply go over to earningsbeats.com, scroll down. We have a free newsletter, Earnings Beats Digest. It's published 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is your name, email address, hit that subscribe button. No credit card required. You can unsubscribe at any time. Normally, we get the digest out around 8:30 in the morning on those 3 days, Mondays, Wednesdays, and Fridays. So it does come out about an hour before the market opens. We try to focus on things that are important to us, things like earnings, gaps, candlesticks, relative strength, those sorts of things. So if you'd like to check it out, learn more about us and the way we approach the market, again, go to earningsbeats.com, scroll down, and make sure you sign up. All right, let's take a look at the daily market recap. Dow Jones Industrial Average finished up 82 points. S&P 500 was down 3, Nasdaq down 4. So S&P and Nasdaq both relatively flat, saw a little bit of strength in the Dow. Mid caps and small caps, however, both down. Mid caps were down about 0.8%. Small caps down exactly 1%. Moving on to sectors, we had healthcare leading up nearly 0.9%. Staples up 0.6%. Communication services 0.3%. Technology 0.2%, and then energy was the primary loser, down about 3.5%. I see a potential topping head and shoulder pattern on the XLE. I'd be very careful if we break and close below $70. This looks like a left shoulder right here, come down to the neckline at 70, put in the head back above 90, came all the way back down to 70, a slightly lower low, so we have a slight down sloping neckline, went back up close to the moving averages, rolling back over again. Close below 70 could measure down to the 50-55 range. So I would be very, very careful with energy. We've had a huge run in this group. Crude oil prices way off their highs, and that XLE now trending below its key moving averages, and that 20-day moving average has moved below the 50-day for the first time in several months, really since the beginning of the year. So not looking very good in that energy space. 10-year Treasury yield, as I mentioned, down 11 basis points on Wednesday, finished at 3.09. Back below the 20-day. I'm kind of watching this 3% level. I think if we break below 3%, that could really give the growth stocks and more of our aggressive areas in the market a little bit more of a lift. So let's watch 3%. Let's see if that holds. For now, I would treat the trading range between about 3% and just under that 350 level, right about the high in mid-June. So let's watch those levels. All right. Moving on to talking technically, I always like to start off with the S&P 500. We are putting in lower lows here over the past 3 days. Last 2 days. We put in a filled candle back on Monday, big red filled candle on Tuesday, slightly lower move here on Wednesday. We are trying to hold on to this gap support area that you can see from back the end of last week. We gapped up here on this Friday morning, went from about 3,800 up to, I can give you the numbers. Gapped up to 38.21, closed that prior day was at 37.95. And the low today, we went all the way back, just about filled that gap, 37.99 was the low. So we'll see whether or not we can hold that gap. If we don't, I think there's a decent chance we go back and potentially have a double bottom, or at least go test that earlier low from back in mid-June, and we'll see if it holds. I would be continuing to watch many of the sustainability ratios that I've talked about on here quite a bit, because if we go back down to that low and the sustainability ratios stay up, I think that's a great sign. If, however, our sustainability ratios roll over and start to print new lows, that would be a different ball game, and that potentially could lead to lower price action. I called the bottom a couple of weeks ago. I'm sticking with it because that's what the charts are telling me. If the charts change, then of course I'm going to change with it. I'm not going to, just stick to a forecast based on technicals from 2 weeks ago if the technicals are changing. So we've got to continually monitor it. But I do believe the bottom is in, and we'll see. We'll see what happens. The Nasdaq. So let's take a look at the Nasdaq 100. Also downtrending on the recent low here, lower prices. You can see that PPO was higher. The low was higher. So that's a positive divergence. And what I normally look for is a 50-day test and a centerline test. We haven't seen either one of those just yet. So if we do hold on, start to rally back up, get through the 20-day, I would be looking at that 50-day, somewhere around 12,400 to 12,500 on the NASDAQ, which would be, roughly 7 or 8% from where we are right now. If we can get back through that 20, that's a big if, got to get back through that 20-day. But volume trends, I think, have turned up. AD line continuing to put in higher lows, even though price action keeps putting in lower lows. I think that's also a positive. It's a sign to me that we do have Wall Street continuing to accumulate shares on weakness. All right, let's move on. Sector rotation. So I wanted to just go through these sectors kind of quickly. Technology, I see positives and I see negatives here. The positive, the relative weakness in technology hit a low back in April, and we have been trading above that since. So even though the S&P 500 went to a new low in June, technology on a relative basis is outperforming. That to me is a bullish signal. As long as that continues and we continue to see this line moving up, these lows moving up, I think that's bullish for the market. Now, if you look back, I would go all the way back. I mean, if you look at this relative PPO at -1, we got to a relative PPO close to -1 back at the end of 2018 and early 2019. Remember, that was the trade war. We had that cyclical bear market. Market went down for 3 months at the end of 2018. Technology was leading that selling. But notice the turn here. We started to actually turn up. We put in the low in December of 2018, if you recall, on the S&P 500. The relative strength on technology did not go lower. That ringing a bell right here? Technology did not go lower, is not going lower at this point, even though the S&P set a new low in June. Very similar to what happened back in December of 2018. Then we came up and went through the 20-week moving average, this relative moving average. Once we did that, we were off to the races. Now, I'm not saying that's what's going to happen, but I wouldn't be surprised if we can break back up above that 20-week moving average. It could trigger the next wave of buying in the market. So I think this is a pretty important chart just to kind of watch, keep an eye on. I mean, if you look back here, you'll see technology was really weak. Here you can see it's been very weak this year, but it comes after a huge move to the upside. So the fact that it's pulled back, and I mean, we could annotate this and we could look at Fibonacci. Let's just go from this low right here. Pretty close. But you can see technology has come back to about that 50% retracement area. That could be all we do. I mean, 61 would take it down another 10%. That's possible. But many times 38 or 50%, these first two retracement zones or levels tend to hold us. So we'll see whether or not we continue moving down, but at least technology has hit an area where we could see a rebound. And like I said, relative strength has been improving. All right, let's move on. I'll go through these others a little faster. Discretionary stocks, put in that low in May. We are off of the low, but we are rolling back over again. This group still is not showing tremendous strength, that's for sure. We did come off that low in May. We'll see if we hold it. I think that would be really important to hold it, to turn back up again before we break down to a new low. Here's the move down. Again, we could do a quick Fibonacci. This one did reach 61.8. So discretionary stocks have pulled back most, two-thirds, almost two-thirds of that rally off the pandemic low. Very, very significant pullback on the XLY. Next up, communication services, very weak, but you can see the low, relative low went in April. Absolute low keeps going down. This isn't telling us that communication services is no longer going lower. It's just telling us that it's not going lower as fast as the S&P 500. So things have started to slow down. Here, we were leading the S&P 500 to the downside. But since April, we've actually put in a higher relative low. So that's good news. Industrials. This year, the relative lows have been rising. So industrials have actually held up better on a relative basis. Now, again, doesn't mean we're not losing money if we're trading industrials. If you're in industrials, they've been going down. They're just not going down as fast as the S&P. So if your goal is to outperform the S&P 500, industrials have been a good place to do that in 2022. Financials, pulling back quite a bit since back at the beginning of February, but still above that relative low that we set late December. But again, absolute price action has been lower. Looking at the defensive groups, healthcare exploded to a new relative high today. That's good news for healthcare. Maybe not so much for the overall market. We really don't want to see defensive groups breaking out on a relative basis. Staples getting close to doing it. Not great. Real estate, we've had a little bit of a move up in June, but we're still well off that earlier April high, the relative high. And utilities turning back up again here over the last week or two, maybe last couple of weeks. But not quite breaking out at this point. We'll see whether or not we can do that. But energy has really weakened. This was a group that had been straight up in 2022, had the most significant relative weakness of the year, the first couple of weeks of June. But we have rebounded. We'll see whether or not that continues. A break back below that 20-week moving average would not be good. Next up, materials. You can see materials also very strong throughout much of 2022, but it has been a brutal June for material stocks. There you can see the breakdown on an absolute basis, and there you can see the relative weakness, which has been pretty significant. So as I look at these, I mean, I see some positives. Technology not breaking down, I think, is a positive. Same goes with discretionary and communication services. Wouldn't say they've been great areas to be involved in. They've had rough 2022s, but their relative weakness, they have not set new relative lows the last couple of months. And I think that's good news. All right, next up, let's go into the eb.com mailbag. So a question I had was, once you find an improving industry, how would you look for leaders within that group? And so first thing I did, I'm running a simple scan here. And the scan is just, I'm looking for stocks that have volume, just a daily simple moving average of volume over the last 50 trading days, which is about 2.5 months, averaging at least 300,000 shares a day. I want to make sure I'm getting liquid stocks. I did a market cap greater than 1,000. That actually is 1 billion. 1,000 in the scan engine means 1 billion. And then I used the group of software because software has been showing better relative strength of late. And so I ran that. And when I did, let's see, yeah, that's going to be the, let's just go ahead and run this. So what I did is I ran this, got 190 stocks back in the software space, and I saved them to a chart list, just a new chart list. Once I did that, I took the chart and set it up the way I wanted all the charts to appear. So I have the price chart with the PPO. I have the volume. I have the AD line. And then down here at the bottom, I've got each stock relative to the Dow Jones US software index, DJUSSW. Once you've done the first chart of these 190, 190 stocks. Once you do the first one, the rest is easy. You go into edit list, or actually, never mind. Pull up the chart the way you got it set up, and then go to the bottom here and hit apply style to all. And then all 190 stocks will be set up in this format. And so I can now that I have 190 of them, I mean, it's going to take a little while to go through 190, but I'm looking for stocks that are showing accumulation distribution moving up and relative strength moving up. For the most part, price action is going to be moving down. Why? Because all software stocks, pretty much all software stocks, have been moving lower this year. So this is just one way, I think, to get a lot of stocks within an industry group into one chart list. Set up one chart list the way you want down here at the bottom, just to show you the chart. I like candlesticks. I have a 1-year chart. I have the width at 1550 because that's filling up my Thunderbolt screen. The height 1000. I like to make sure it's big enough where if you have it at say 500, it's just going to be harder to read the chart. You can get it all on one screen, which is nice, but to me it's just too congested. I just like to have more room, so I set this one at 1000. If you want the volume down here, you can just hit that separate. So the volume shows up in a separate panel right here. Then I use the PPO, the AD line, and then this is where I set up the relative price action. And I use the height 1.0 on each of these so that each one of these panels is just as big as the price chart. Again, just easier for me to read. And then literally I just go through each one. There's Accenture price action down, trying to break out on the AD line to about a 6-month high. overall relative strength, not bad. It's been mostly trending higher. Since we pulled back January, February, we've been moving higher again. So I think Accenture looks pretty good. And then, ACVA moving lower. Look at the AD line, horrible. Look at the relative strength, new lows, or relative weakness, I should say. Have no interest in this stock. So that's all I do. I just go through and, try to pick out the ones I think are interesting. And you could do this with multiple industries, looking through lots of charts. Find out, look to find maybe the top 5, 10, 20 software stocks that you like and put them in a separate watch list. Do the same thing with semiconductors. Do the same thing with renewable energy. Do the same thing with autos, with different retail groups, broadline retail, specialty retail, home improvement retail, whatever. I'm going through the aggressive groups right now, thinking about different industry groups. But that would be the way I would focus on trying to get leaders into maybe a chart list or a watch list for you to check out. All right, moving on to earnings spotlight. There were a few companies that did report after the close today, Wednesday. First one, National Beverage Corp, FIZZ. They beat on their bottom line, 46 cents versus 36 cents. And the stock was down after hours 4.3%. So it's probably going to be back here in about the 46 and 46 and a quarter, 46.50 area. Another stock that reported, DCT. This is Duck Creek Technologies. They beat. They actually, I think on that last one, let me go back to that last one for a second. Because I'm showing that FIZZ actually missed on their earnings estimate, 36 cents versus 46 cents. And the stock was down 4% after hours. All right, next up is DCT. They actually beat. Market was expecting a flat quarter, and they actually came up with a penny earnings. So they did beat. The stock is down 16% after hours. So big move down. I mean, you can see the group's going down. DCT, for the most part, has been underperforming, shown a little bit of relative strength last couple of months, but maybe not much more than maybe a dead cat relative bounce. But anyway, the stock down quite a bit after hours. NG, that's NovaGold Resources. This is the stock's been trending lower down near 52-week low. They did miss. They were expected to lose 2 cents. They lost 4 cents. Stock relatively flat after hours, down just fractionally. All right, SGH, this is a semiconductor. Semiconductor is not performing well at all. SGH has been moving lower throughout the year. They beat 87 cents versus 75. Stock's down 13% after hours. Didn't matter that they beat earnings estimates. I think we got to be really careful with the semiconductor group going into earnings. They're just not performing well. Maybe if you get stocks that are showing tremendous leadership, maybe they'll come through with some good reports and maybe hold up after earnings. But SGH looked like, at least on bottom line, nice report, but stock down 13% after hours. One other, CDMO, they reported 7 cent profit. Market was only expecting 1 cent. Stock has shown strength, getting back up above its 20, which is now above its 50, and it's up almost 7% after hours. Starting to show a little bit of relative strength versus the biotechs. Of course, biotechs have been pretty weak this year. But CDMO, at least for tomorrow, looks like it's set to open higher. All right. Thought maybe for the 3 you must see, I'd focus on software. Since I looked back, I did go through the list of software stocks and thought I would just feature a few of them. So let's take a look first at Cadence Design Systems, CDNS. A couple of things stick out. Number one, the AD line. Right here, just a week ago or a few days ago, it was at a 52-week high on its AD line, even though it's nowhere near the high that was set back in December. So I'm seeing some accumulation here. Also, look at the volume picking up as we come off this last low. And then this was a stock I actually mentioned to Earnings Beats members today in my daily market report because it had pulled back to the 20-day. So this is a stock that's doing pretty well relative to software. Look at this, 52-week high relative to software peers. Software has been going down. This stock mostly has been going sideways. So it's been holding up on a relative basis. AD line strong, testing the 20-day. You can keep a stop pretty tight right here. Closed below about 149. I'd be a little bit more nervous with the stock. So again, maybe a 1%, 1.5% loss is what you'd be risking. All right, next up, BRZE. This is Braze. AD lines just exploded here off the last low. Look at all these hollow candles. Look at the volume picking up. That combination has sent the AD line soaring. Last 2 days on very light volume, we come down and we test the 20-day. Again, just like CDNS, I think this is a great reward to risk entry point into Braze. So there's software going down. Braze trying to strengthen here. I'd like to see it move above that April relative high. All right, last one, Dynatrace, DT. Again, look at the AD line. Just set a new 52-week high. Look how far we are off the high from back in October, November. Fallen from $80 down just above 40, and yet the AD line setting a new high. Pretty good action. Also, you can see the volume coming in during these moves to the upside. This little pullback last couple of days, lighter volume, testing that rising 20-day, which is above the 50-day. I mean, if we are bottoming and software is beginning to show some relative strength, some of these stocks that are leaders showing strong AD, strong relative strength, I think they're poised to bounce off these 20-day moving average. So we'll see. All right, that is it for me. I want to thank all of you for checking this out. This will be my last show of this week. I'll be back next Monday for the next show over at earningsbeats.com. Simply go over and just make sure you're on the home page and click on that Trading Places Live link anytime 15 minutes before 9 o'clock. And that will get you set up. Anyway, have a great rest of your week. Enjoy your weekend. And I'll see you next week. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.